12 hours ago, this was a conflict between nations. Right now, it is a war with American casualties. United States Central Command confirmed this afternoon that 3 American soldiers were killed in action, and 5 more were seriously wounded after Iranian missile strikes hit a military base in Kuwait. These are the first American combat deaths of this war. And they change everything. Not because the geopolitical picture was unclear before, it was clear, but because the moment American soldiers come home in flag-draped coffins, the political calculus in Washington shifts from, should we be doing this, to we have to finish what we started. Congressional support for a war, Power's resolution to halt the operation just became exponentially harder to pass. The off-ramp just got narrower, and the timeline for this conflict just got longer. In the last 24 hours, the escalation has been relentless on every front. The United States Navy has sunk 9 Iranian warships. Iran's chief of staff, Abdolrahim Musavi, has been confirmed dead, adding to a kill list that now includes over 40 senior Iranian military and political officials. Iran's Revolutionary Guard launched what they called a large-scale retaliatory strike this morning. 9 Israeli civilians were killed and over 40 wounded when a ballistic missile hit the town of Beit Shemesh, 19 miles from Jerusalem. In Dubai, debris from intercepted missiles damaged the Burj Al Arab, one of the most iconic buildings in the world. The UAE has ordered all schools and universities closed through Wednesday. In Pakistan, hundreds of protesters attempted to storm the United States consulate in Karachi. 9 people were killed in the violence. The Pope called for an end to the spiral of violence, and Donald Trump told CNBC that military operations are, in his words, ahead of schedule. While the world was processing the shock of yesterday's attack, the financial markets were already moving. Brent crude jumped 10% to $80 a barrel in over-the-counter trading today. That is not a Monday forecast. That is what already happened today on the only market that was open. COMEX futures, which include gold and silver, open tonight at 5 p.m. Central Time, which is 1 in the morning Monday in Turkey and 6 p.m. Eastern in New York. In a few hours, every commodity trader, every fund manager, every algorithm on the planet will price in 48 hours of war, 3 dead American soldiers, 9 sunk warships, a closed strait, and an oil market that has already moved 10% before the official opening bell. Gold closed Friday at $5,278. Silver closed at $94.30. Those prices are already obsolete. What opens tonight will be a different market, trading a different reality. And I need to walk you through exactly what is about to happen and why. To understand why tonight's futures open matters more than any single trading session in decades, you need to see what the market is about to absorb all at once. Financial markets process information in real time during the week. A missile strike at 10 in the morning gets priced in by 10:15. A sanctions announcement at noon moves the market by 12:30. But this war started on a Saturday. Every development since then, every missile, every casualty, every diplomatic statement, every radio transmission from the Iranian Navy telling ships to stop has accumulated without being priced into any live market. Tonight's open is not a normal open. It is 48 hours of war compressed into a single tick. There are 4 specific catalysts that the market will process simultaneously when futures begin trading tonight. The first is oil. Brent crude already jumped 10% in over-the-counter trading today, reaching $80 a barrel. But the OTC market is thin. It is a fraction of the liquidity that exists in the futures market. When full futures trading resumes, every oil trader in the world will react to the confirmed status of the Strait of Hormuz. Iran's Revolutionary Guard broadcast closure warnings. Oil companies paused shipments. Insurance brokers issued cancellation notices. The former White House energy advisor, Bob McNally, said it publicly today. He called this the real deal and warned that if Iran makes Hormuz unsafe for commercial traffic, oil could spike above $100 per barrel. At $80 already before the official open, $100 is not a distant theoretical. It is one bad headline away. The second catalyst is gold. $5,278 was Friday's close. That price does not reflect 3 American soldiers dying in Kuwait. It does not reflect 9 Iranian warships being sunk. It does not reflect 9 Israeli civilians killed in Beit Shemesh. It does not reflect the Pope calling for peace, which historically signals that the situation is severe enough to demand moral intervention from the world's largest religious institution. Gold at 5,300 is the consensus resistance level. Analysts at multiple desks are now discussing 5,500 and 6,000 as targets if the conflict broadens further. Given what happened in the last 24 hours, the conflict is broadening. The third catalyst is silver, and this is where the analysis that most people are missing becomes critical. Silver entered this weekend at $94 with COMEX registered inventory at 86 million ounces, March delivery demand at 52 million ounces, and the weakest speculative positioning in years. All of that was true before the war. Now add the Hormuz disruption, the insurance cancellations, the oil spike driving inflation expectations. and the flood of capital seeking hard asset exposure at a price point below gold's $5,000 barrier. Silver is the pressure valve. It is where the volume of global fear meets the scarcity of physical supply. And that collision happens tonight. The fourth catalyst is the one nobody is talking about yet. 3 American combat deaths mean this war now has domestic political stakes. Congress will debate a war powers resolution this week, but Trump has already signaled he will veto it. He called the operations ahead of schedule. The Secretary of State, Marco Rubio, is coordinating from Mar-a-Lago. This administration is not stopping. And every day the war continues, the war premium on commodities grows. This is not a one-day spike. It is a structural repricing that begins tonight and compounds daily for as long as the conflict lasts. If what you have been hearing in this video changes how you think about the next week in markets, hit subscribe. This channel is tracking this crisis in real time, video by video, with data most channels do not even know exists. Now let me walk you through this scenario tree for what happens between tonight and Friday, because the range of outcomes is wider than anything the market has priced in over the last decade. The key variable is Hormuz. Every other factor, gold's trajectory, silver's trajectory, oil's trajectory, stock market declines, inflation expectations, central bank responses, all of them depend on one question. Does the Strait of Hormuz remain disrupted, or does it reopen? Scenario 1, the contained scenario. The United States Navy establishes enough presence to create a safe corridor through Hormuz within days. Iran's naval capability has been significantly degraded with 9 warships sunk. Commercial shipping resumes with elevated insurance premiums but functional passage. In this scenario, oil settles between $80 and $90 per barrel. Gold holds above 5,300. Silver trades between 95 and 105. The war premium persists, but does not escalate. This is the optimistic case, and even in this case, silver is above $100. Scenario 2, the prolonged disruption. Hormuz remains contested for weeks. Iran uses its mine stockpiles, short-range missiles, and fast attack boats to create an unsafe environment, even without formally closing the strait. Insurance companies refuse to cover Gulf transit or charge premiums that make shipping economically unviable. Oil breaks above $100. Gold pushes toward 5,500 or higher. Silver, driven by both safe haven demand and industrial supply chain panic, gaps above 100 and stays there. The gold to silver ratio compresses from its current level near 56 toward the historical extreme of 40 or lower, implying silver above 130 at 5,300 gold. Global stock markets enter correction territory. Central banks in Asia begin emergency accumulation of hard assets. Scenario 3. Full escalation. Hormuz is effectively closed for an extended period. Iran deploys mines. Saudi oil infrastructure is targeted. The Houthis resume full-scale attacks on Red Sea shipping, closing the second major maritime corridor. Both choke points that connect east and west are disrupted simultaneously. In this scenario, the word recession enters every headline. Oil spikes toward 120 or higher. Strategic petroleum reserves are tapped globally. Gold goes vertical toward 6,000. Silver enters what analysts call a breakaway gap, a price discontinuity where the metal opens so far above the previous close that the chart shows empty space between the two prices. This scenario is unlikely in its full form, but 48 hours ago, the scenario of Khamenei being killed, Hormuz being closed, and American soldiers dying in Kuwait was also considered unlikely. The market prices probabilities, not certainties. And right now, the probability-weighted outcome across all 3 scenarios is dramatically higher for precious metals than where Friday's close left them. Even the most conservative scenario has silver at or above $100. The aggressive scenario has it at 130 or beyond, and the market has not even opened yet. That is why tonight matters. Not because of what one candle on a chart will look like, but because the opening price will set the new floor from which everything else is measured for the rest of the week, the rest of the month, and potentially the rest of the year. Here's the part that requires you to step back from the daily news cycle and see the structural architecture underneath all of this noise. What is happening right now is not just a war premium on commodities, it is the collision of 3 long-term trends that have been building for years, and the war has forced them into the same moment. The first trend is de-dollarization. For the last 5 years, central banks around the world have been quietly reducing their exposure to U.S. Treasury bonds and increasing their holdings of physical gold and, increasingly, silver. China reclassified silver as a strategic material. Russia and China condemned the U.S. strikes, but neither is in a position to intervene militarily. What they are in a position to do is accelerate the diversification away from dollar-denominated assets. Every missile that hits a Gulf state that hosts American military bases reinforces the message that alignment with the United States carries physical risk. The capital flow response to that message is away from dollars and toward hard assets. The second trend is the physical supply crisis that has been building in silver specifically since 2020. 5 consecutive years of global structural deficit. Comex registered inventory down 64%. Shanghai inventory is at multi-year lows. Lease rates that have touched levels not seen in decades. This trend existed independently of any war. The war did not create the shortage. The war removed the last remaining buffer that the system had to manage the shortage without a price explosion. That buffer was time. Before this weekend, the market could gradually adjust. Prices could rise incrementally. Supply chains could adapt slowly. That luxury of gradual adjustment is gone. The market must now reprice immediately under conditions of maximum uncertainty, minimum inventory, and disrupted logistics. The third trend is the retail and institutional awakening to silver as a monetary asset, not just an industrial commodity. The data tells this story clearly. Managed money. Speculative positions collapsed 77% year over year. That sounds bearish until you realize what replaced them. Physical delivery demand surged to record levels. Industrial users are taking metal out of the vault. Sovereign buyers are accumulating. ETF holdings are being scrutinized for whether they actually hold the physical metal they claim to. The market is splitting into two tiers. The paper tier, where contracts trade at prices set by algorithms and margin requirements. And the physical tier, where actual metal changes, hands at prices increasingly disconnected from the paper market. The Shanghai premium of 20% over COMEX is the most visible expression of this split, but it exists everywhere. Try buying a 1,000-ounce bar of silver today at the COMEX spot price. You will discover that the real price, the price at which physical metal is actually available, is higher than what the screen shows. Here's the question I want you to carry forward from this video. If the paper market says silver is $94 and the physical market says it is over $100, and the war just added a risk premium that has not been priced into either market yet, and futures open in hours, then which price is real? The answer to that question is worth more than any single trade, because it tells you something fundamental about the system you are operating in. The price on the screen is a negotiated fiction between exchanges, clearinghouses, and margin requirements. The price at the physical bar is a negotiated reality between a buyer who needs it and a seller who has it. Those two prices are about to diverge further than at any point in modern financial history. Drop your prediction for tonight's open in the comments. Gold, silver, oil. I want to see where this community lands before the bell rings. So here is where we stand on the evening of March 1st, 2026. The supreme leader of Iran is dead. Over 40 senior Iranian officials have been eliminated. 9 warships have been sunk. 3 American soldiers have been killed and 5 wounded. 9 Israeli civilians are dead from a direct missile hit on a residential area. The Burj Al Arab in Dubai has been damaged. Schools across the UAE are closed. Pakistan saw 9 people killed attempting to storm an American consulate. The Pope has called for an end to the violence, and the President of the United States says the operation is ahead of schedule. Oil has already jumped 10% to $80 before the futures market even opens. Gold closed Friday at a price that does not reflect any of these developments. Silver closed at a price that does not reflect any of these developments. And in a few hours, every exchange on Earth will simultaneously attempt to find the new price that does. This is the moment where preparation separates people from the crowd. Not preparation in the sense of making a trade tonight. I am not a financial advisor, and nothing in this video constitutes financial advice. Preparation in the sense of understanding what you are watching. Because the vast majority of people will wake up tomorrow, see a headline about oil prices, see a number next to gold, see a number next to silver, and have no framework for understanding why those numbers moved or where they are going next. You now have that framework. You know that COMEX has 86 million ounces of registered silver against 127 million ounces of demand in 60 days. You know that the Strait of Hormuz is disrupted and that 20% of the world's oil passes through it. You know that Brent crude moved 10% in a single day on thin weekend trading. You know that every major Middle East war in the last 50 years has driven precious metals sharply higher, and that this war started from the weakest silver supply position in the exchange's modern history. You know that managed money is flushed, that physical demand is structural, and that the gap between paper and physical is widening. The question is what you do with that framework. Not tonight, not in the heat of the moment, but in the days and weeks ahead as this conflict unfolds and the financial system processes its consequences. The war may end quickly. Trump may find a diplomatic exit. Hormuz may reopen. Prices may correct. Or the war may escalate further. Congress may fail to stop it. Hormuz may remain contested. And prices may go places that the current models do not even contemplate. Both outcomes are possible. The one thing that is not possible is that nothing changes. That silver goes back to 94 and gold goes back to 5,200 and oil goes back to 72 as if this weekend did not happen. It happened. And the market opens tonight. I started this video with 3 American soldiers killed in Kuwait. I want to end with what that means beyond the financial numbers. It means this war has a human cost that is being paid right now by real people, soldiers, civilians in Beit Shemesh, families in Tehran, communities across the Gulf. The financial analysis matters because it affects millions of lives through inflation, purchasing power, and economic stability. But the analysis should never lose sight of the reality underneath the numbers. The market's open tonight. The numbers will move. What you understand about why they move is the only edge that compounds over time. The repricing has begun. Stay informed, stay measured, and stay ahead.